Hello everyone and welcome to my daily report market analysis videos on Tuesday the 5th of November with me, Richard Perry, market analyst at Hantec. There is a very slight positive risk appetite that's filtering through markets today, a little bit sort of chopping and changing around the euro and sterling, but broadly speaking that yen is weaker, also the Swiss franc is weaker. Aussie dollar and Kiwi dollar are both outperforming, as is the Canadian dollar. So there's a definite sort of risk on, risk off split that we see through FX markets, where the risk appetite has certainly picked up, and you've got this general feed through of just positive news flow surrounding the trade dispute negotiations between US and China sort of moves towards a phase one trade agreement, and that is certainly helping this risk improvement, and that's why we're seeing these moves. You've got the gold price also lower, but look at these treasury yields. Treasury yields have picked up sharply in the last couple of days on the 10-year and the 2-year, and look at the steepening of the yield curve. That 3-month 10-year spread is at the highest. It's 27 basis points now, at the highest since March. So that's certainly sort of indicative of this improvement in risk appetite that we have seen recently. S&P 500 breaking to ever new high ground, 3078 now. Even the Dow closed at all-time high territory last night, and that's the first time that's happened for several weeks now. So that's obviously, again, indicative of this improvement in risk sentiment that we have been seeing. Now, we had the Reserve Bank of Australia overnight giving a monetary policy update. Broadly speaking, holding rates steady at 0.75%. Sort of keeping an eye on the prospect of a potential need for a rate cut, but not at the moment. And the market is still anticipating a rate cut in the coming meetings, but not at the moment. The Aussie gaining on the back of that. So today, focus is on the service sector PMIs. Now, we've had the Chinese services PMI for the Caixin, and it came out at 51.1. So that actually is an 8-month low, I believe, on the Caixin services PMI. Then looking out this morning, we're going to the UK services PMIs, expected to tick a slight amount higher to 49.7 from 49.5. So the main sector in the UK economy, around about 80% is service sector in the UK economy, still in contraction there. Then into the afternoon, we're looking out for the US ISM non-manufacturing data, and that is at 3 o'clock for the US, and again is expected to pretty positive actually, 53.5 up from 52.6. But we saw the manufacturing ISM data disappointing on Friday, and so the services sector for the US ISM data will be a very important read through there for the US economy and how the consumer is responding. So that takes me to my chart today, which is Euro Canadian. Now, what we've seen in recent times is the euro sort of a much better outlook, but look at the Canadian dollar, which generally speaking, if I zoom out actually, you can see here throughout 2019, Euro Canadian going lower, lower highs, lower lows, consistently breaking down. Old support becomes new resistance. That happens on a consistent basis, suggesting the outperformance of the Canadian dollar, and that is a continued theme. We saw the Canadian dollar weakening last week on the Bank of Canada monetary policy decision, but certainly looks as though that has been seen as a chance to sell Euro Canadian again. And 47.10, this pivot line of the last few months, again coming in as a key basis of resistance in the last few days. Yesterday's decisive negative candle falling below 46.40, which you can see on the hourly chart, is a little top pattern, and now starting to fall away. That 46.40 level becoming resistance this morning. So you can see that with the momentum indicators, the RSI failing around the 60 point again, and that has happened consistently time and time again throughout 2019. 60 on the RSI has been a basis where the sellers have come back in. You've got the MACD lines falling over potentially again around neutral. The stochastics already crossing lower. So this really is sort of developing into this another situation where rallies get sold into on euro Canadian. Canadian dollar seems to be set still to be an outperformer on the Forex majors. And as I said, Euro Canadian falling over below 46.40, completes a little top pattern, only a small one, around about 80 or so pips of downside projection target. But it certainly looks as though we're going to be falling back into the 45.50 to 45.25 area of support from mid last week. But also the prospect of retesting these lows again, 44.10, 44.50, would come back in, certainly if those momentum indicators continue to roll over, as they tend to do so. So that's interesting, and I will wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.